Greetings. My name is Richard Samuels, and I'm principal broker and president of Obsidian Mortgage Corporation and Financial Services. I wanted to take this moment briefly just to discuss some of the recent announcements by Minister Jim Flaherty less than a month ago. On February 16, 2010, the federal government announced that further changes to the way that banks and financial institutions will be lending mortgages commencing April 19, 2010. In his initial statement, Minister Flaherty indicated that these initiatives are being taken to help Canadians prepare for the higher interest rates in the future, as well as to help prevent Canadians from becoming overextended. Before continuing with these changes, I just feel it is important for me to note that these changes only affect CMHC insured and government-backed mortgages only. So basically, within your bank or your financial institution, if the mortgage is over 75 or 80% loan to value, these rules will affect you. If your mortgage happens to be less than 75% loan to value, then you're subject to the lending requirements of that particular financial institution. The first change being mentioned is the newly introduced 5-year fixed qualification rate. In this new rule, borrowers will need to qualify using a 5-year Bank of Canada posted fixed rate model on any variable rate mortgage or fixed term mortgage with terms less than 5 years. So for example, in Obsidian Mortgage Corporation currently we have a promotion for the 5-year variable. Our 5-year variable product is prime minus 40 or 1.85%. If you wanted this product commencing April 19th, 2010, you would actually have to qualify using the higher 5-year Bank of Canada posted fixed rate, which as of today currently is 5.39%. This means that it will be a little more difficult to qualify for variable rate mortgages or for fixed rate mortgages with terms less than 5 years. Although most lenders currently use the 3 or 5 year posted rate to calculate maximum amounts that they can lend to an individual, many use discounted rates for qualification purposes, and the qualifying or discounting rate is usually anywhere from 3.25 to 3.79%, depending on which term and which lender you're using. What does this mean? Well, to illustrate, let's say we have an individual who's making approximately $100,000 a year, paying out $2,000 a month in credit cards and auto payments, and we'll say $3,500 in taxes and $100 in heating. This individual, as of today, would qualify for a maximum mortgage at 30-year AM for $216,952. As of April 19th, 2010, based on the rate currently as it is today, the 5-year fixed qualification rate of 5.39, the same individual would qualify for $168,988 as their maximum mortgage. This would represent a difference of approximately $48,000, which is $48,000 less than what you could actually be approved for today. That being said, individuals getting a 5-year fixed term mortgage or greater, so 5, 7, or even a 10-year fixed rate mortgage, would be able to qualify at the discounted rate, which currently would sit at 3.74. So if you're getting a 5-year fixed rate mortgage, we could actually qualify you at a 3.74% rate, which is our current fixed rate mortgage best rate, as opposed to the 5.39 5-year fixed rate model proposed through the Bank of Canada. One of the other changes announced, I guess earlier on this month, is in regards to refinancing your home. As of April 19th, homeowners will no longer be able to refinance their home at 95% of its value. 90% will be the new refinance maximum. This will affect any homeowner's ability to pay off high interest debt with lower cost mortgage money at the end of the day, because the cushions to which they could refinance will be lesser. Meaning that going forward, basically the government believes that this will stop homeowners from using their homes as proverbial ATM machines and allow them to actually build equity and accumulate equity and savings in their home. This will also hinder those who have mortgages currently over 90%, as they won't be able to refinance with a major institution, and chances are that will lead to outside financing, which is usually a higher cost. One of the third rules announced was the change announced In regards to the maximum insured financing given to those people buying rental properties. Currently, under the law right now, as it stands, if you were to purchase a rental property, you could purchase the rental property with as little as 5% down if you qualify. Commencing April 19th, 2010, the maximum insured finance amount will be 80% loan to value, which means that in essence you will have to now put down 20% in order to purchase that rental property. I believe this will, reduce a lot of the investors currently purchasing and creating rental homes in the market here in Canada. You'll see a reduction in that somewhat. It's probably even see a raise in somewhat in material rents across the board. But again, I'm not a real estate speculator, so I don't want to. I'll leave the speculations to the experts. I'm just here to report at the end of the day the changes in the rules so people are aware. But generally, you're looking at this rule affecting rental markets and individuals who are deeply entrenched in those rental markets. You might have heard all those lease-to-own homes. At this point, they'll be affected because, again, instead of buying homes at 5% down, they're going to now have to put down 20% down in order to purchase these rental properties. But that being said, it's the way life changes. I will keep you posted. The more information we're provided, the more information we'll make sure to post, because this information is important to you. Money matters, and dealing with the largest liability that you'll probably have over your lifetime, it is important to make sure that any information that can affect that liability or that asset, we get to you as quick as we can, because money does matter. Now, lenders have already begun altering and adhering to these changes. If you're currently in a position where you're looking to refinance your home, to refinance, or you're looking to purchase rental properties or purchase a new home, or seeking to take out equity out of your home for consolidation purposes, in the immediate future you may want to act before these rules take effect. Preparation for homeowners may be in order, as you have other things and factors coming in this year as well. These changes are just one of many different factors that will be impacting Canadians, and in particular Torontonians, over the next few months. The HST here in Ontario comes into effect come July, and that'll affect all homes over 400,000, as well as we have the talk right now currently of property tax being raised here in the GTA. So there are factors and things to consider when deciding to purchase a home, and we look forward to helping you discuss those factors. Any questions or concerns, you always feel free to send me an email at info@obsidianmortgages.com, or you can feel free to give us a call if you have any questions, concerns, or feedback. Our number here is 416-283-2377, and I look forward to discussing these changes in the near future and discussing your personal situation.